Hello and welcome to Weekend Investing Daily Bytes. Today is 7th September. We are shooting episode number 88. Today we are going to talk about additional funds that are required in a small case rebalance, why we need them, how much you should have arranged for it is all that we will talk about. Let's first take a look at the markets. So the markets were largely softer. There were many bouts of the bulls trying to come back, but pretty much at the end of the day, all the losses got recovered, and the Bank Nifty was, of course, much weaker from the very start, but that also recovered some ground, if not all. So within the various sectors, almost everything was losing money except for some FMCG consumption stocks. Levers, etc. were leading the charge there, and realty sector was the worst hit sector. IT stocks were down, PSU banks were down, pharma was down, metals were down. So it was a bit of a profit-taking day after many days of an uptrend. As we can see that the last 1 week and the last 1 month has been reasonably green for most of the sectors. In terms of the weekend investing performances, nothing really to talk about, between 0.5% positive to -1% is the performance for the day. And as you can see here, the indices Nifty 50 going down to Nifty Next 50 all were down marginally from 0.1% to 0.3%. The weeks gone by has been quite brilliant. The 3 months gone by has been phenomenal, and financial year so far, again, fantastic numbers till date. So the question is, should you need additional funds for your small case rebalance? Now, this is a very peculiar situation that arose because of SEBI margin rules. And prior to these margin rules, there was no need for any additional funds. So you could just sell your exit stocks and buy the entry stocks without any need for any additional funds. And to date, nobody has been able to give a convincing answer why the regulator has imposed this kind of margining on a on a investment based investor base. So when you are selling delivery stocks and your broker is able to do a prepay during the day itself, there should be no need for any margin to be blocked there. I mean, you have delivered the stocks, and the margin should be released. What happens overnight with 20% getting retained by the system is anybody's guess, and basically somebody is getting that float. So that 20% float is actually benefiting the intermediaries who are holding that cash. So why should retail investors or individual investors not have access to their money right there and then when it is available? But somebody else will basically have that advantage of the float. So in terms of let's go through this process. So this is the most frequent query that we get, and in this daily bite we are trying to address this query, that you are doing this rebalance and you get this notification that funds were not sufficient to complete the order. So a new investor or a first time investor will get very perplexed, that I bought a weekend investing small case and I put in 2 lakh rupees, and now I'm doing a rebalance and it is asking for more funds. Why should this happen? So as I said, the SEBI peak margin norms, when you sell stocks from your demat account, only 80% of the sale value can be used the same day, and 20% gets released the next day. So if you are selling stocks on Monday morning for 100 rupees worth, you will only be able to use 80 rupees on Monday, and the 20 rupees will come to you on Tuesday morning. So your sale has been broken up into 2 parts. 80 rupees today, you get the credit, and 20 rupees tomorrow. But in all our rebalances, we want the 100 to be sold and something to be bought against that 100 rupees. So we are not able to buy the full quantum on the first day itself, and that creates this two-legged transaction, which defeats the whole purpose of a single click investing mechanism, which very beautifully Smallcase has made. So what is happening here? You do the rebalance, sell orders get processed. So because sell orders get processed because of your balance of stocks in your demat account, and they are already there, so they will get processed. The sale proceeds, 80% of the sale proceeds is available to you the same day, and 20% buy orders will get rejected. Only 80% will get processed, and that may or may not happen for this entire thing, as we will see. So in case your broker account has zero funds, so now I am assuming that your broker account was just doing this Smallcase weekend investing Smallcase, and it did not have any additional funds more than what you've already deployed. So only if your buy orders were less than 80% of total sell orders will that go smoothly without any obstruction, and that will not happen because each sale is backed by an equivalent amount of buy. So only 80% will go through. So if you had this 10 stock portfolio, and let's see what we are doing. We are exiting A and B. So we have this two stocks, A and B, which we are exiting, and we are adding X and Y. So the total investment we have here is 12,540, which we are exiting, and we are getting 80% of that. So 10,000 rupees is what we can buy today on Monday, let's say, if you're doing this rebalance. So, and let's say your buying was in X and Y at these rates and at these prices, again 12,550, but only 80% of your sale of 10,032 can be bought. So what will happen here? You will not have enough funds to complete the buy order, and you are short by some amount of the 20% that is there. So either one order will go through and the next order will be short, but that depends upon the constituents prices and each quantum and how many constituents are there. Maybe there is only one constituent of 12,000 rupees that you need to buy. So you will get this notification that funds were insufficient, and you will not be able to process it. So what ideally you should do is, if 80% of your sale proceeds get deployed and some part gets left, then you can come back the next day and repair that order when you have that credit. So one solution is that. The second solution is that you have about 8 to 10% of your current investments available on that rebalance day. I'm not saying keep that idle in your broker account, but you may have those 8 to 10% sitting in some gold Bs, liquid Bs, nifty Bs, whatever you may choose, or just cash if you like, and have that available when this is needed. Because let's say in a 20 stock portfolio, usually you will not have more than 2 or 3 stocks which may rebalance usually. So in a 20 stock portfolio, 3 stocks will mean about 15% of your overall portfolio value to be changing, and 20% of that will mean about 3%. So about even a 3 to 5% of your Smallcase portfolio value, if you are having as additional cash on that day, the orders will go through. 8 to 10 is a bit of a larger buffer that I am suggesting, but even 4 to 5%, if you are able to provide on rebalance days, it should go through without any hassle. Now there are other situations where there could be a sell order stuck in a lower circuit. Let's say you wanted to sell something, and now that is stuck in a lower circuit, but you need the additional funds for the buying. to happen. So there the additional funds can be useful. So you could buy using your additional funds, and as and when you are able to sell, maybe a day later or 2 days later, that fund can be then deployed back to your cash buffer that you have. So in all this entirety of this article, you could also choose to not have any additional funds. You could choose to sell your stocks on Monday and buy them on Tuesday, for instance, buy them on Wednesday, for instance. So there can be situations where you don't want to do them back to back, you only want to sell. You can manage your order. You can do a sell on Monday and not do the buying, or you may do some part buying on Monday and do the rest of the buying on Wednesday, also to average out your buying prices in case things have moved. So there are many ways of doing this, and very soon we will be coming out with a tool which Smallcase is making with our inputs, that we should be able to do a check on the history, that if we were rebalancing on a Wednesday, if we were rebalancing on a Tuesday at 11 p.m., at 11 a.m., or at 3 p.m., what would have been the changes in our portfolio? And that will give us very good insights into, that we need not all do a rebalance on Monday at 9:15, which seems to be the case in many people's mind, that we need to do it first thing in the morning. So once we have that study available by the end of this month, we will be in a better situation to tell you about how easily you can maybe even avoid periods where the stocks may be moving very hard, or you may just do a rebalance even a day later. So this is all I had for the Daily Byte. Thank you for watching all these videos, and do let me know what other topics you would want me to cover. Thank you. Bye.